How are we getting on, people? Luke here from LAGFX. We are back today with another video. In today's video, we are going to be doing a case study on the Great British Pound to the Japanese Yen. My goal for this video is to give you guys zones and areas that you can apply to your own charts and potentially trade and profit from, but also to give you a rundown on how I actually go about doing my top-down analysis. I think this is going to be a great way and a great learning curve for you guys in a way that is going to help you get a sense of clarity when it comes to actually me placing my positions. I think it's all good and well, showing these zones and areas, but going in depth into how I actually do my analysis, I think is going to be key, as that is going to help you guys when you go on to analyze the markets yourself. Now, if you guys do go on to learn something from this, or you do go on to place a profitable position based on the zones and areas that I give you, don't forget to leave the video a thumbs up. All the support you guys provide on a daily basis is very much appreciated. And as you guys know, it helps us get out there, but also helps change the misconceptions that Forex has. As you know, our movement and our motto for LAGFX is to be the change that this industry needs. Now, without blabbering on too much, let's jump straight into today's case study video. So, as I said, we are going to be going over the Great British Pound to the Japanese Yen. So the first thing that I like to do is zoom out and look at the 1 week time frame, just so we have all the data on screen, so we know exactly what we are looking at. And I like to distinguish what my bias is going to be and what the prevailed trend is. One rule in my trading book is to always trade with the prevailed trend, because if we do that, then our probability of being successful with that position is going to be higher. So, just looking at the structure of this market, we can see evidently that this market is actually trading us bearish. Why is it trading us bearish? Because in 1975, we had a high of 719.619. And at the moment, in current data, looking at 2023, we have a low as 161.673. So that in itself shows that this market has been gradually decreasing in value. Now, what we can also look at is the structure that this market is putting in. So we are seeing clear bearish structure as price is putting in lower highs and lower lows. So by looking at the structure and looking at the price over time, we can see that this market is decreasing. So with all that being said, we have come to the conclusion that we want to be bears in this market. We want to be looking actively for selling opportunities. Now, if we were presented with a higher time frame displacement in price or break of structure, then yes, we would then be looking to trade bullish, as that tells us that the bearish trend has finished and the new bullish trend is underway. So with that being said, we would only look to buy into this market if we were delivered with a break of structure from this high here. Now, why this high here? Because this high here went on to create the lowest low that has been created from this whole bearishness. So this marks the last protected high. So with that being said, if price was to surpass this protected high, that would be the confirmation we need in order to start looking to buy into this market, as this current bearish trend has finished and the creation of a new bullish trend is underway. So once I've distinguished my bias and I understand the prevailed trend, that is when I like to zoom in, maybe go down to the day time frame and look more at current data. So I usually look at the last 20 years, the last 10 to 15, 20 years, just so I can see really what's going on. And as we can see, we have this initial impulsive wave that's taken us lower. And as we can see, price has and is within a corrective phase at the moment. So with that being said, what we can do is we can look within this impulsive wave here for any supply zones that price needs to tap into before taking that next move lower. So as you can see, I've already highlighted a zone here. What we can do is we can just have a deeper look and we can see if we have missed any other unmitigated areas within this market. So what I like to do is just scan over the entire market. So we could say that there's some inefficient structure in between this high and the lows that were created here. So we could say that actually this here, there is some inefficiency in price, so that could be a potential area to look out for. We may need to clear that before before the markets could trade lower, but we will dig deeper and we will look into this as we go down on time frames. So again, I've obviously highlighted out this area, as this is a potential last buy to sell region that price needs to tap into. We can also look and see, well, okay, well, this peak came as high as this, and then we have some inefficient structure there as well. So in between this zone and this peak, there could be some inefficiency. So we'll look at that as we go down on time frames, and then as we look, so this peak comes to clear this peak comes to clear this peak comes to actually sweep these previous ones, and so does this. So that's all cleared. This comes to sweep this and any inefficient structure that was below this one here, so that's all fine. Then obviously we have a massive move lower, so realistically we want to see all of this be cleared as price goes on. We can see that price has actually come up as high as that. You'll notice here, price has traded above. Price is now trading around this zone and has delivered us with, beginning signs that price may be trading bearish. So what I'm going to do is just highlight this peak being here, so then we can go back and we can see, okay, well, where has price taken us up to? Price has taken us up to this, so anything beneath this has been cleared. So what is left is anything above this and obviously here. So we can look within this then as we go down on the time frames. So I'm just going to go down to the 4 hours. Again, just going back and looking at this data, just for any unmitigated areas. And you can see here actually where this peak resides, we have had a last buy to sell region, and that was actually inefficient. So that is good signs in itself that we've seen rejection from there. There is obviously supply waiting to be cleared and activated, so that's a very good sign. So once I have done that and I have found specific zones and areas that I want to look out for, that is when I then continue to go down in time frames and start to look at things more fractally. So we can look at buying before we sell, and we can look at taking advantage of the footprints that are being put into the market. So obviously we have our main zone highlighted here, our higher time frame supply zone that we had highlighted. This, as I said, marks the swing point. So if price was to break above this, we could then say that actually this market is ready to trade us bullish, and we should be looking for bullish positions longer term. But as it stands, we are trading beneath that, so we are within bearish structure. So again, what I like to do is zoom in. So now looking at the 4 hour time frame, I'm really zooming into more present data. So now we're going back as far as last year. We can see that actually price put in that peak that was tapping into an unmitigated area on previous data and has since put in a bearish structure. So this is brilliant. This is good signs. This is showing that enough supply has been introduced into this market to actually continue trading us lower. Now, as we go into more present time, so looking now just as far back as December of last year, we can see that there is a lot of inefficient structure from this last to buy sell region and this high here. So price realistically needs to come to clear all this inefficiency and possibly tap into this supply zone. This supply zone is valid because, as you can see, price puts in a bullish leg, trades lower, and then trades us higher. So this clears all of this, but then this has been left over. So I've highlighted this zone and this area as a place that price could possibly tap into. Enough supply will be introduced, and then we should see the continuation of bearishness. So as we have an area to look to sell from, we also have a take profit target to aim for if we are looking to buy into this market to trade us into this zone. So not only do we have an area to sell from, but we also have an area that we can look to take profit from if we find buy opportunities. Now, when it comes to finding buy opportunities, what we need to do is go down time frames again. We need to go fractally into the markets and find areas of demand that could be relative for us to look to buy from. So I have evidently highlighted another last sell to buy region here. This is a clear point of demand. Price has tapped into this, delivered us with bullish structure, breaking previous structural highs. So we can say that this has broken structure to the upside, and that bullishness has now been confirmed, as this has concluded this current trend trading us lower, and the next bullish trend is underway. So I'm just going to highlight this as a BRIOS to the upside. Then what we did is we looked again within this initial impulsive wave that broke structure to the upside for any inefficient structure, any unmitigated candles that we could look to potentially buy from. And if we go down as low as the 15-minute time frame, I believe, it might be the 5. Let's have a look. Yeah, we can see here that there is a last sell to buy region again that had been left unmitigated. The price needs to come back down to tap into that before trading us higher. Price has done exactly that. Price has delivered us with that penetration, the rejection to the upside, the break of structure, so that confirms that this correction has finished and the next bullish wave is ready to take place. So now that we understand that, we can look to trade this market higher. So what I would have done realistically is once we were delivered with this break of structure here, I would have found unmitigated candles within the impulsive wave that broke the structure, as we did on the higher time frames. We are just doing the same steps over and over again, repeating the process, but going more and more fractally, as this is going to allow us to get a refined entry. So again, just looking at this initial impulsive wave. So if we go down as low as the 1 minute time frames, I'm just going to move this back, go down to the 1 minute time frames. Let's try and find some unmitigated areas. So I can see one here, and I can also see another one here as well. So with that being said, we have two areas to work with that could be good potential for us to buy from. So let's just see how price plays out, and I'll see if we are delivered with the right confirmation in order to actually execute a buy position. So we've been delivered with a penetration of this zone. We want to see good rejection to the upside. Price looks to be trading beneath this, so there clearly wasn't enough demand here to trade price higher. Price is obviously looking to dig deeper into the markets. Price has now tapped into this. What we want to see is a break of structure to the upside for us to start looking to buy into this market. So we want this structural high to break and a valid pullback in order for us to get an entry. Price has just now broken structure to the upside. We want to see price pull back into a valid demand zone, so we could look at this impulsive wave for a valid demand zone, but it looks as though price has continued to actually surpass this initial impulsive wave. So entry confirmation wasn't given. Price looks to be sweeping this zone yet again, digging deeper to grab more demand in order to flip the supply and demand balance. It looks as though price has come in, grabbed more demand to the upside, shown great signs of rejection. We've had another fractal break of structure here. We could also wait for this if we wanted higher time frame confirmation in order to get an entry. We could have wait for a break of structure here, but if you were to be preemptive and look for positions just based on, looking at the real fractal nature of the structure, we would say, well, this was a break of structure here. There was a last sell to buy region here. Price came to tap into that perfectly. If I just move that to the left, you can see that I've highlighted this red candle. Price has come to tap into this early. So if we wanted to be preemptive and we wanted to get involved just looking at the fractal nature of the structure, we could set our stop loss, I always say 2 or 3 pips below the zone, just so we can avoid being swept out of the markets. So let's have it as low as 10 pips. Now again, if you want to be safe with your position, you could mark it at the previous swing high. This would give us a 1 to 2.37 risk to reward ratio. Or alternatively, if we wanted to trade price higher into our higher time frame supply zone, which we have marked out, we could do that. So we could actually look to trade price all the way up into this zone here, giving us an 800 pip take profit with a 10 pip stop loss. That has given us a 1 to 80 risk to reward ratio. Or again, if we just want to trade up until this higher time frame swing point, we could move our take profit down and trade just to this point here, which is probably what I would do, and then I would look to get reintroduced. This still gives us a brilliant risk to reward ratio of a 1 to 18. So, if you're risking 1%, you're looking at gaining 18% back in returns. So let's just see how price plays out and if we are delivered with more confirmation in order to get involved in another position. We've been delivered with a higher time frame or a 5-minute, 10-minute time frame break of structure to the upside now. Price has started to trade higher. So now what we can do is we can look within this impulsive wave for entry to get involved in. I would say looking at this last sell to buy region. So looking within this for price to tap back into. It looks as though we've had a tap of that zone. Let's see if price digs deeper. Price has dug deeper into that zone. So as soon as we see this, we see price dig deeper and rejection to the upside. As soon as price pulls back here, I probably would have looked to have got involved again. So another long position here, probably on the close of this red candle and the open of the green. I'd have my stop loss again a few pips beneath the zone itself. So again, another 10 pip stop loss with our take profit set at this swing high here. So we've got two positions, one with a 1 to 17 risk to reward ratio, and then one with a 1 to 18 risk to reward ratio. So let's just see how price plays out. So it looks like we were caught out with the first position. So as we can see, the first position played out perfectly. As it stands here, price is trading 60 pips, so 6 RR, so 6% from that position so far. And then this trade obviously hit stop loss, so we lost 1% on that. So that means 5 RR that we've gained. But it did go on to trade us as high as 26 pips, so that's 2.5 RR from that trade. So if we took a partial for 50%, we were walking away with 1.25 on that trade. But ultimately, let's just say we took a loss there. As we can see, we're still walking away with at least 5 RR from this market. And that was all by just looking at the higher time frame structure, finding valid supply and demand zones, giving ourselves targets and areas to work with, then breaking it down and going down to the fractal nature of the structure, understanding the direction in which this market is going in, waiting for confirmation via breaks of structure to the opposite side, and then pullbacks into valid supply and demand zones, and then getting involved. With my strategy and how I work and how I trade, it is all based on the laws of structure and looking at valid zones and areas to get involved from. In doing so, I am delivered with multiple pieces of confluence and confirmation before I actually place my positions. I think it's extremely important that we are delivered with multiple pieces of confluence before we even look to execute a position in a market. If you are going into a market blind without anything to, back your bias and the direction you're trading in, then it is just going to lead in a loss. So with me placing this buy position, I understand, yes, the overall structure of the market is bearish, but we are within a corrective phase. So with that being said, this market is currently trading us bullish. Hence why we are looking for buy positions in this market. All I did was wait for a higher time frame bearish correction to finish within this bullish phase. As soon as I was delivered with a break of structure to the upside, I then waited for a pullback on that break of structure, as you can see here. As soon as we had rejection from that, so again, waiting for a break of structure to the upside, we were delivered with that here and here. We then placed our positions. Now in doing so, we were able to place a position like this. Now, if I just go back, you can see that actually this trade is currently trading very, very well as it stands. So we lost 1% from this second position that we placed. But as it stands, this second position here is currently trading us 107 pips, but has peaked at 115. So 15 RR is what we have gained from this position. Now, if you're risking 1%, that's 15%. Obviously, we lost 1% from here, so we're currently 14% up on this position here. Now, this has all been achieved by doing a top-down analysis and understanding the laws of structure. Now, realistically, we could stretch our take profit as high as this supply zone, as at the end of the day, that is our higher time frame goal. We want to see price trade into this so it can deliver us with its next bearish impulse where we'll be then looking to sell. So realistically, we could open our take profit or modify our take profit and change it to a price round here. Now, as you can see, this offers us with an amazing risk-reward ratio of 1 to 80. So if that is achieved, then you have nearly doubled your account size in one position. And this is all genuine. This is all a real way of trading. There are no hidden catches. There are no, there is no misleading in this. This is all full transparency. I've just gone through a full top-down analysis and I've given you zones and areas to work and look out for. Now, this is a prime example as to why I don't place hundreds of positions in a month. I maybe place 10 to 15 positions a month. I class myself as an intraday trader, but I only limit myself to 10 or 15 trades a month, just as I am not usually delivered with all the confluence I need. But when I am delivered with the confluence I need, we are able to profit like this. People may think, oh no, this isn't realistic, this isn't believable, but I've just gone through a full top down with you and I've just managed to find a potential trade that we could have taken. And I have also gone through that process with you blindly. Now, in terms of giving you guys zones and areas to walk away with today that you could potentially look to trade from, I want you to highlight this supply zone out, because as soon as price taps into this, I'm wanting to see structure break to the downside. So let me just get my brush tool out. I want to see price trade us up, deliver us with a peak, price to set a low, price to go on to set a lower high. That is our first signs that price may be looking to reverse. Enough supply has been introduced to actually flip the supply and demand balance. Price to then deliver us with a break of structure to the downside. Price will then pull back into a supply zone that has been left within the initial impulsive wave. Price to tap into that and then deliver us with bearish structure. So if I just change the color now of my brush tool, our break of structure is obviously here. Price has set a high, price has come down to set a low. In bullishness, we should see a higher high, a higher low, continuation in bullishness. But instead, we've been delivered with a break of structure. Price has broken what was a protected low. Price then pulls back, taps into a valid supply zone that I have highlighted. So I'll find a supply zone like this. Price will tap in. Price will then deliver us with another fractal break of structure within this supply zone here, and then that is when I'll look to get involved. So then, just as an example, my position would be something like this. I'll have my stop loss just above the zone, and my take profit would be set at this swing low here. The reason why I'm setting my take profit at this swing low, or just above this swing low, is because we can almost guarantee that our take profit is going to be achieved. Why? Because if we are following bearishness overall on the higher time frame structure, we understand that within bearish structure, price produces lower highs and lower lows. Every low is broken to create a new lower low, and every high is protected. So this high that is created from the penetration of the zone should be protected, and this low here that has been created on the higher time frames should be broken to create a new lower low. Now, I hope all of that makes sense, and as I said, please highlight this supply zone out for yourself, because this is definitely an area we are going to want to be looking to get involved from. Now, before we place those sell positions from that supply zone, what we can do is we can look within this current impulsive wave for any demand zones that we can look to actually trade from. So all we need to do is look for any unmitigated areas. We would probably say this was a good area to get involved from, as this is a last sell to buy region. So we could have looked to have got involved here as of recently. All we needed to see was a penetration, a tap into this zone and into this area of price. Price has obviously done that and delivered us with good signs of bullishness. So we could have looked to got involved there. But we also have this as well to look out for. So let me just move that there. We also have this that I would like to see price tap into. So what I'm going to do is actually mark this out for you all, and you could look to potentially buy into this market from this zone here. So again, if you haven't done, mark out this zone, pause the video, mark out this zone. This is on the 5-minute time frames. This could be an area to look to get involved in. I think by the time you guys watch this, price probably would have already played out. But if not, happy days, get yourself involved, because I do believe price is going to tap into this and deliver us with further bullishness. But again, just look for valid demand zones. That's all we need to find is valid demand zones, last sell to buy regions that have been left unmitigated. Price just needs to tap into them, deliver us with good signs of rejection, breaks of structure to the upside, and we can look to obviously add into our buy positions. Now, I hope you guys have enjoyed this video. I've tried to go over exactly how I trade and the methodology behind it. So I hope you guys have actually learned something from this. And in doing so, I also hope you have taken advantage of this supply zone here, because this is somewhere we are going to be looking to sell from. Now, don't get me wrong, this isn't going to be a trade that we can place next week or this week even. It's probably going to be further on in the future. But that gives you guys plenty of time to watch this video, prepare yourself for this trade. And on top of that, it also gives you opportunities to buy into the zone itself. So finding valid demand zones to actually trade us into this supply zone here. If there is anything I have gone through today in this video that you are unsure about and you are struggling to understand, please leave it in the comments below, or alternatively, message me on Telegram. I am very active on Telegram and I take the time to reply to everyone. I may not get around to replying to you straight away, but best believe I will reply to you. So if there's anything you're unsure about, I am more than happy to, explain and actually help and show you how to understand the things that I have gone through. Now, I hope you guys have enjoyed this case study, and we'll catch you all in the next video.